morning. You're watching The Market right here on ET now with me, Asha Faridi, Nikunj, Dalmiya, in the studios. And the lack of cues for the markets continues. The markets have just been dragging their feet in a very, very narrow band. 18,000 at the peak of last week. 17,000 thereabouts at the bottom end, and no clear trend clearly in the market. Even if you pick up the top 5 movers, there's not one sectoral trend that you can really pinpoint for the market. The long unwinding, of course, in the F&O markets continues. Remember, this week you've got F&O expiry as well to deal with, so hopefully some amount of traction either on the upside or downside is what we can expect to actually pick up. But that said, no US Qs as well overnight. Remember, US equity markets and bond markets were shut. So we're staring at, once again, Nikunj, an absolutely flat start on the SGX Nifty.
Aisha, there are phases in the market where there is fear. There are phases in the market there is excitement. There are phases in the market where there is lack of interest and just low participation. And that's the most boring phase.
This is one of those.
This is one of those phases. Unfortunately, this phase has really, in terms of a Nifty, it has really extended itself. The word range bound or the word listless is something which I think is at play for the better part of 2023. And 2023 has been one of those years of hectic news flow. Adani sell-off, what's happening on the geopolitical front, earnings season which has not been very great. The news has kept us busy, but that has not generated any upside momentum, or that has not really pushed anything down the barrel, at least for the market. So one of the phases of the market where I guess you have to accept and recognize and acknowledge the fact that this is a range-bound market which perhaps is hunting for a trigger to generate momentum on the upside, or or some kind of a ripple which will take benchmark indices below the key support levels. What drives the market in the short term? I guess it is always news and flows. News has dried up completely, and flows have been completely wishy-washy.
Yep, that's exactly the way it has been. There's just lack of cues. You were saying you want to talk about cricket.
This summary is like a summary of the show. Now, next 2 hours, I don't know what we will discuss. 5 minutes, we know what the market setup is. We can actually say, okay, show over, let's go home. Then nothing to talk.
But you don't know whether this is the calm before the storm or the calm that's going to pick up the markets up.
I can argue both ways, and I'll give you a perspective here. I'll try and do it. If you're a bull, you would say whatever could go wrong has gone wrong, and the Nifty in a sense has still held out, and it is still above key technical levels. The bears would argue and say that okay, what's next now? There is nothing in terms of an upside momentum, and the fact that the market is running into resistance at higher levels, which means supply is much more than the demand. So you can argue both ways, at least for the moment. But the Nifty data is just telling you the real story, if you frankly ask me, in terms of level of participation, the total delivery volume, and what is happening to the F&O market.
Yeah, maybe we should pepper the show with a little more chat about cricket and Bollywood, because it's absolutely dull. Even when you look at the Asian screen, there's nothing really happening. The trend on the SGX Nifty as well is absolutely lackluster around the 17,877 mark. And let's take it straight to how we shaped up in yesterday's trading day, the start of the expiry week, and nothing to really shout home about. So quiet as ever, forget 18K. Yesterday it was a challenge to even hold on to 17,850. As we wrapped up the day, 0.5% higher. It was the broader markets in comparison that did mildly better. Second straight day that you saw FIIs that sold in trade. PSU banks were a big drag, but they weren't isolated. It was across the board that you saw selling coming in. And in terms of what really managed to be your lone soldier in the green or really hold out was tech, definitely, and then select life insurance stocks. And then you also had the currency that was upbeat on brokerage reports. So, Nikunj, anything to add basis what happened Monday? Silence.
No, let's look at an important, comment, some comments which have come from Mr. Kotak. And the Kotak conference is on, and where Mr. Kotak, in a sense, was addressing to the institutional investors. And his general messaging is that the best of the peak growth for India is behind us, but you will still grow at 6% plus. And if you'll grow at 6% plus, you will be in some kind of an enviable spot, at least in comparison with the world. He's also indicated that the slowdown, I think, is something which is obvious, and post festival season there seems to be a marked slowdown in consumer discretionary and consumer staples. He's clearly of the view that there is no interest rate shock, at least in the world right now. And in general, there is an important message which has come from him that they are looking at increasing their unsecured book. Now, Kotak has been very conservative in terms of taking a stance of not growing the unsecured book. But for the first time, Mr. Kotak has come out and said that they're looking at increasing the unsecured book. And that is something which could be an interesting one. NIMs might have peaked out, but can be managed, which means he's also hinting to a fact that the best of the margin picture what we saw for banks for the quarter gone by may really be a peak. Never seen such fast cycles, and that is a realization for all of us that in less than 2 years, from a world which had no concerns on inflation, we are now only obsessed with what will happen to rate and what will happen to inflation. So that's today Kotak acknowledging and indicating that the peak, the COVID sugar rush is clearly behind us, but you're still in a good spot.
Yeah, he's saying that never seen such fast cycles earlier. Extended rate hike cycle risk may actually hurt asset classes, and that India has emerged as one of the stronger nations. Buying fuel from Russia at a discount benefit India clearly, saying that important for India to be current account surplus, and that he expects India to achieve 6% real GDP growth in FY24. Also saying that signs of discretionary slowdown are visible, encourage government to focus on capex spending, and that he sees strong banks credit growth at 1.5 times of nominal GDP. He's saying NIMs might have peaked out but can be managed. In fact, talking about banks, here's Vikas Prasad as well, portfolio manager Asia Equities and M&G Investments, who believes that India's healthcare story is intact and that India's earnings growth story is still looking very strong. Says IT is not looking as bad but will reduce exposure to private banks.
The Indian healthcare story is still intact, very strong. If you look at hospitals, services, some pockets of biotech and pharma, I agree with the view on diagnostics. If you look at IT services, the larger companies, it's not as bad as people think. If you listen to the commentary, if you look at the numbers, revenues are healthier than people thought. Margins are higher than people thought they would be. Banks is one area where we prefer some of the smaller and middle-sized ones, specialty finance, housing finance, not so much the big banks. The scale is such, you have to be more careful. Autos have surprised me, four-wheeler and now two-wheelers. I think those are fertile grounds for long-term investors. We can keep going, there's a lot to talk about.
Yeah.
But I think the point is that if you look over the past 2 decades, there have been so many episodes where you have gotten these questions, I have gotten these questions. If you think about May 2004, May 2009, when the election results were surprising. 2013, the summer, yield curve inverting, currency blowing out, same questions. Global financial crisis, COVID. But the market endures because the earnings growth story is so strong. There are other markets where there's a short-term trade. This is not one of them. This is perhaps the longest dated trade in the world when it comes to equities, and we're here to be a part of that.
Okay, trendless, boring, but it's a market which surely is giving you an interesting data point when it comes to the near-term Nifty futures. I'm talking about the March Nifty futures, and for the month of March, Nifty futures are trading at a fat premium. So if the market interest is so low, and if everybody is resigned to the fact that it's not going up, it's not going down, why do we have Nifty futures trading at such a premium? So Kunal, I know the answer, we are in a range. I know the answer, it's not going anywhere. I know the answer, 18,150 is important for markets So that let's not discuss what we've discussed in the last 20 days. Let's discuss the importance of this data. If the market interest is so cut and dry, why are Nifty futures trading at a fat premium in the month of March?
So good morning, Nikunj. The trend less at least means there is some sort of trend, even if it's less. But this is a no trending market, frankly. We are cut into a very tight range for the index.
When did we see something like this last before?
So I think I remember this was June, July 2021, where the markets were stuck into a 300-point band for almost 3 months, 2.5 months. And then from there we broke out. That was, I think, 14,000 odd levels, and then we moved to 18,000.
So the same could happen?
So let's hope this time again it happens. But the question which you've raised is also very interesting. 130 points premium. Now, how is the premium calculated? What is the impact? What is the significance of premium? Premium is just derived from the cost of carry, which means if your interest rates, your base interest rates, they rise. So earlier, for example, maybe 5 months back, the base interest rate would be 5 to 5.5%. That has moved higher to 8.5%. The cost of carry, which is how the premiums are calculated, that has moved up higher, and that's one of the basic reasons why the premium has moved from a base of 75 to 80 points to now 120 odd points. So the more the interest rates would keep on rising up higher, the more the average premium would keep on jumping up higher. So for example, just assume a scenario where there is a 12% RFR or the risk-free return. And on that, we calculate that 1% is the cost of carry every month. So which means if we assume 18,000 as a Nifty, which means 180 points could be the average premium, just for the sake of calculation.
Right. Naresh, hi, morning. Any trend that you foresee, or do you think it's going to be listless for a while?
So it's been listless for a while. Say, like Kunal was discussing the last time, it was in July 21. And in that period of time, we actually saw metals as a sector do well. The index went up 50%. The problem right now is it is not just the index which is sideways. We are not seeing a lot of stock-specific price action as well. So you open up with a small gap or a gap up or a gap down, and you just stay there for the broader market indices also. So the problem is it is not just the index which is in a sideways zone. The broader market continues to be in a sideways zone. Very few selective moves happening, and this cannot continue for long. And say there is a saying, do not short a dull market. So that's the reason you don't go short in the current market. So you have to wait for the right time. So as of now, it is the waiting period. We are seeing some spots, say a bounce back in IT names. So that's a trade I'll be watching out for. But overall, waiting and watching for markets to give you that indication.
Okay, that's the view coming in from our chartists on the overall index. So let's find out where exactly it is that they believe there could be momentum in some individual stocks. So Kunal, after searching hard and deep, what exactly have you come up with?
Well, I'll concentrate on few stock-specific names and taking some bit of high-risk trades over here. So two buy calls. One is on Divi Slab, a stock which we flagged off, I think, a week back when the stock was sub 2,800 levels. It's formed a classical bottom, at least on the charts. Indicators oversold. The stock in terms of sentiment going into an extreme pessimism. So on majority of the front, the indicator seems to be suggesting that the stock has hit a major support for itself. And looking at the recent moves of correction, that also makes sense because the stock has completed a major 50% retracement from the long-term lows for itself. So would suggest that as a buy. Initial targets of 3,050, stop loss to be kept at 2,800. And the second would be a buy on India Mart. Again, a contra call. The stock closed almost closer to the lower point of the day yesterday, but it's hit back towards the 3 standard deviations, balling a band on the intraday charts. So I'm expecting some sort of a relief rally to come by into the stock. A 3% up move is what I'm expecting broadly, suggesting a buy with targets of 4,900, stop loss at 4,700.
Right. Naresh, what about your stock-specific ideas?
So first is a buy on Coal India. The only place we are seeing some bit of a strength is in the oil and gas space and in the PSU pack. So Coal India is one which has made a base around 215 levels, setting up for a bounce back in a fresh trade here. A stop loss at 213 and a target price of 240. Second is a buy on Wipro, which is a risk reward trade. The stock has corrected from 700, 750 all the way down to 400 and has not bounced back like the rest of the IT names. Shaping up for a bounce, the last 2 week lows are at 400 and 412 remains a short-term resistance. If it can sustain above 412, that would be a breakout. So good risk reward here, a stop loss at 398 and a target price of 440.
That's an interesting mix that our chartists are picking out, looking at some of the defensive names perhaps in today's trading session. But let's get a move on then and hear it out from Ramesh Damani then. He's bullish on defense and railway PSUs, saying that data is the new oil, and he is also betting big on companies that operate big in the data space.
I'll tell you the two new sectors that we've been trying to bet on. Some you may be familiar with. Data, as everyone keeps telling you, Nikunj, is the new oil. I mean, that's now a well-known fact out there. Now, data has a lot of components. You've got to aggregate it, you've got to analyze it, you've got to put intelligence out of it. Now, if you look at the companies in India that do specialize in data, I think their employee cost as a percentage of revenues is between 60 and 70%, which tells me two things, that this business is coming to India, because if India is paying 70% in salary cost for this business, it's clearly a business that cannot be done in America or London or Germany. It has to move to India. So there are a lot of new companies in there that are using data either to aggregate it in a database or ship it out in intelligent forms. So I think the first sector of new ideas, if you wish, is we're looking at those set of companies, because we believe that the cost basis of that business also almost ensures, given that we have now good telecommunication and cheap property prices, that the business will shift to India. The second business, which you, as you know, I've been bullish on the last few years, is particularly some of the defense and railway PSUs. And given the government's capex push in railways particularly, I think there's some very cheap stocks, I'll use that word advisedly, cheap stocks in the railway space. And if you notice the last few days, there's been a lot of noise of India becoming an export powerhouse in the defense sector. Now, if India is going to be an export powerhouse on defense, $5 billion is the number bandied around next year. I think a couple of listed companies which will have to benefit dramatically from that push. So I would say you go for data, and then I would still stick to some of the cheaper defense and rail PSUs, particularly because of the capex and export push that they're experiencing.
But are these businesses, especially the defense stroke railway businesses, are these high quality businesses? Because the top line may be great and the government commitment towards defense and railways is strong, but some would argue back and say that these are not the best of the businesses when it comes to return ratios.
Well, I disagree with that. I mean, I'll give you an example of a company that I still own, and I'm only saying it as an example, not for anyone to buy it or anything like that. So please be very careful. You remember, Nikunj, in the early 2000s, we used to buy a company called Bharat Electronics, which I own today also, but I'm not recommending it. I'm just saying that the stock from those lows, it was a 300 crore market cap, it's now 60,000 crore market cap. So over the years, it's compounded for investors, paid a very rich dividend yield. So I get very, a bit upset with people who trash, throw the baby out of the bathwater. It is your job as an analyst to find the good from the bad, the good PSUs from the bad PSUs. Don't necessarily look at the resource-rich PSUs or the telecom PSUs, but others to look at. Just like you can fail in the public, in the private sector enterprises, so many businesses in private sectors have failed miserably. So then PSU, and the aggregate of taking all the PSUs in one basket and looking at the returns of 10 years is misnomer, because you're comparing apples and oranges. So you look at defense PSU separately, railways PSU separately, commodity PSU separately, and then you'll start making more intelligent decisions. So I completely and totally disagree that the return ratios are bad. In fact, some of these dividend payouts, return on capital, cash flow yields, corporate governance, matches that I have seen in some of the better private sector companies. And at the end of the day, you're making money in them. I mean, that's always the test in the stock market, that are you making sustainable money in them? Because they're paying you dividends and they are, generating cash flow. And I think they are. So, I'm happy, if people are ignoring it, that's okay. It gives me an opportunity to buy these stocks cheaper, which I am. But, we're not necessarily very to PSU. We're very to good PSUs that are delivering for the shareholders. And we have lots of private sector companies. So if you're not comfortable, all means go ahead with the private sector companies. But if you're an analyst sitting in Bombay and trying to figure out cheapness and value and growth and prospects, I don't see how you can ignore that basket.
Okay, the RBI is watching the Indian economy and taking a call as and when it is required, said the Finance Minister Nirmala Sitharaman as she flagged off global concerns. Let's hear it out.
इन्फ्लेशन कंट्रोल के लिए मैंने बजट रिप्लाई के द्वारा एक नहीं बहुत सारे कदम जो केंद्र सरकार ने उठाया उसको लिस्ट आउट किया। उसमें मैं इस उदाहरण के लिए 3-4 आपके सामने रख रही हूँ। बहुत सारे स्टेप्स हमने उठाया। शायद पिछले 12 वीक्स और 24 वीक्स में, वो मैं करेक्ट करना चाहती हूँ, 24 वीक्स सबसे लोवेस्ट लेवल में आया है WPI। सो इन्फ्लेशन कंट्रोल के लिए बहुत सारे कदम सरकार उठा रही है और कंटिन्यूअस उसमें ध्यान देते रहेंगे।
Moving right on, the government is considering raising the 5 lakh rupee limit for taxing insurance premiums. ET Now has learned from the Finance Ministry sources that deliberation on the issue is ongoing with stakeholders. Anurag Shah, my colleague, has all those details. Anurag?
In Union Budget, it was announced that if aggregate premium is more than 5 lakh per annum for traditional life insurance policy, then income from these life insurance policy would be taxable. Life insurance companies were not happy about this announcement. They have made representation to Finance Ministry. They have made representation to Finance Minister Nirmala Sitharaman also. And as per our sources from Finance Ministry, government is re-examining the limit of 5 lakh as there are the deliberations going on with all the stakeholders, as industry has proposed to tweak the limit from 5 lakh to 10 lakh, but government is examining the impact of if they change the limit or they increase the limit from 5 lakh. So it will be a very big development related to the insurance sector, and we have seen that companies like HDFC Life, Max Life, SBI Life, LIC, they all were impacted. For HDFC Life, the total premium was around 10%, which was aggregate more than 5 lakh. So if the government tweaks this limit of 5 lakh and increases the threshold limit for more than 5 lakh, then it will be a big relief for insurance companies like HDFC Life. And as per our sources, there are the serious deliberations are going on to change this 5 lakh limit.
Okay, let's now take a look at what Bank of America Securities Amish Shah lists out in his brokerage note. Pankaj is here to give us all the highlights.
So he's speaking about his Q3 numbers into detail and what essentially they at BofA make of the latest India strategy regarding the Q3 numbers. What they are pointing out is that there were earnings downgrade that came in, but on the other hand, there was a margin surprise as well for a lot of sectors. So I think that is something which they are essentially telling their clients to watch out for. In terms of their market view, not particularly negative, not particularly positive. Commenting about numbers, they believe that Q3 downgrades could actually continue because of the global uncertain environment, whether it's high rates, whether it's a global slowdown, all of that is something which they are worried about at this point of time. In terms of a detailed analysis, they believe that certain sectors like healthcare did particularly well, certain sectors like pharma selectively were decently well, and construction and cap goods and probably the capex infra continues to do well. So this is probably some spaces where they like Q3 numbers. They may or may not be overweight on these selective stocks or names, but they believe that these are sectors which have shown some good traction in earnings.
Right, that's the latest coming in from BofA Securities, talking about their brokerage note. Limited earnings cuts and volatility with tactical plays is going to be the order for the year ahead. Well, moving right on then, the Reserve Bank has done a great job in supporting the economy and working with policymakers. That's the word coming in from Nouriel Rubini in an exclusive chat. And he also says that more rate hikes could be warranted if inflation worries persist. Let's listen in.
So far, I think the RBI has done well. They thought that they probably were done with the last policy hike, 25 basis points in February. Unfortunately, the data about headline inflation and core since then have come slightly higher than expected, even if wholesale inflation is lower. There is a state of the world in which, unfortunately, inflationary pressure may be persisting, and therefore the RBI might be forced to hike slightly more and withdraw further liquidity if the world is a weaker one. And if the world is going to be one which will be financial pressure on the currency, on the balance of payment and so on, then the policy trade-offs are going to be challenging, because either you prevent the currency by essentially weakening by doing forex intervention that has cost and benefits, or you let the currency weaken. If it weakens too much, that may be a source of imported inflation, or you hike essentially policy rates in a way that weakens economic growth. I think that you have to manage it carefully. I would say that the margin, while the currency has weakened on a number of measures, say the real exchange rate equilibrium, probably there is still room for some depreciation, especially if you're thinking about having export-led growth, either of manufacturing or also of services. So a gradually falling currency may not lead to significant imported inflation, especially because some of your raw material, like oil and energy from Russia, is bought at not international market prices, but discounted prices. And the benefit of having a slightly weaker currency, like in the case of the Asian tiger, might outperform any kind of concerns about imported inflation. So maintaining a competitive currency should be actually one of the important objectives of the RBI.
Talking of currency, we are also trying to conduct international trade with a lot of partners across the world in our own currency, be it Russia, Iran, Africa, parts of Southeast Asia. Do you see that gain momentum?
Yeah, I'm on the view that overall there will be a process of de-dollarization over time. Part of it is just structural. The share of global economy of the U.S. is falling from 40 to 20%. Doesn't make sense for the U.S. dollar to be 2/3 of all international financial and trade transactions. Part of it is geopolitics. The U.S. is weaponizing the U.S. dollar for national security and foreign policy objectives. That, of course, makes the rivals of the U.S. uncomfortable, but even some of the friends and allies of the U.S., whether in the Middle East or even in Asia, are a little bit queasy about that. And you can see how the rupiah could become, for some of the trade that India does with the rest of the world, especially South-South trade, could become a vehicle currency, could be a unit of account, could be a means of payment, could become a store of value. Certainly, rupiah over time could become one of the variety of global reserve currencies in the world.
Okay, let's move on and let's talk about the FMCG sector, which is in focus as brokerage houses have come out with notes on two major consumer goods companies, ITC and Marico. In fact, Goldman Sachs has maintained a buy on ITC, while Citi has opened a 90-day positive catalyst watch on Marico. Vinny joins in with more details on these brokerage notes.
So absolutely, we have two notes in the FMCG space. One is ITC and the other is Marico. So let's first talk about ITC. Now, Goldman Sachs has come out with a note on ITC, maintaining a buy rating given a target price of 450 rupees per share. They believe that the FMCG business has a significant contribution to ITC's EBIT, and capital allocation has actually improved, resulting to 85% of the PAT to free cash flow generation and conversion there. Now, overall, ITC, they believe, PE is in line with the 15-year average, despite the improvements that they've seen coming in. And obviously ITC's premium over global tobacco peers is in line with its history as well. Valuation still at a steep discount compared to other FMCG companies, despite when you compare to other FMCG companies. So they still find it quite attractive in terms of that as well. Moving on to Marico. Now, Citi has come out with a note on Marico. They've opened a 90-day positive catalyst watch on Marico. They believe that the volume growth acceleration in its core brands is a positive. They believe there could be a healthy uptick coming in overall Marico's business in Q4 as well. And they see an improving trend across its core brands like Parachute and Saffola. And Marico's revenue earnings growth likely to be at the higher end going forward as well. As let's not forget, in terms of stock valuation gap versus peers is to narrow. So there is a room also in terms of the stock valuation gap as well. So keep an eye out on that one.
It gives me great pleasure to bring on board Nishish Daya, the co-founder of PB Fintech or Policy Bazaar. Chat GPT is the buzzword right now. It is threatening to challenge Google. Technology is like that. It just surprises you, whether it is AI or platform enabled. What are the chances that the technology, which in a sense is your proprietary bread and butter, your secret sauce, could itself get challenged?
Every business in the world eventually will die. Every business, whoever it is. I think our job is to keep ourselves relevant for the longest period, right? And make our businesses go through a phase. That's the same about humans. We all eventually die.
Devin Choksi joins us. Good morning, Devin. How are things?
Hi, Nikunj. Good morning. Very well. Thank you.
What's keeping you busy? Markets तो कुछ नहीं हो रहा है.
I know. I think the markets kuch nahi ho raha hai, but overall, looking at the opportunities in the investment markets, particularly when you are seeing many of the good quality stocks are now being neglected despite of good fundamental performance and the promises to have relatively better performance going forward. They are here being neglected, and that is what is asking us to review the portfolios again and probably try and increase the weight where we are more comfortable. We are comfortable with some of the auto names. We are comfortable with auto ancillary names. We are also comfortable buying into some of the IT and mid-cap IT names into the portfolio. And probably, I think, closely looking at, I think, how the commodities are behaving. Maybe, I think, at this point of time, not taking exposure into commodity, but certainly want to keep an eye on it. If it gives the signs of stability, then probably, I think, it will be the next thing to look out for eventually.
Added any Adani group of stocks in this decline in last 7 days?
Not really, Nikunj. I think we've been holding on to ports and transmission, and I think we continue to hold both these companies, looking at the fundamental strength of both of them. Honestly, I think not added any other stocks at this point of time in the portfolio. So some of them have started becoming attractive. One could possibly allow the situation to get calmed down, and probably try and take some position into those companies.
Suresh, if the narrative for Adani group of stocks is slightly bearish or is cautious, then why is Ambuja and FNO banned? What does that indicate, Naresh?
The derivative ban in India is more so because we have a market-wide position limits which are very, very tight. Unlike you can go into the US, it can be much more higher than the number of shares available. So it's been tight. So whenever the positions come in, and it also calculates the options as well. So overall, say it is coming in and out of it, and this keeps on happening whenever a stock sees a lot of volatility or a lot of move, or companies where the volumes have significantly gone up in the near term. So I would not give it a much credence because say the market-wide position limits do not go to 20% of equity, so it's just 5% to 10% of equity in most cases. If you look at the free float, etc. basis. So overall, it's a very small number, and that's the reason a lot of stocks keep going into it. So Ambuja Cements is something which is now getting in and getting out of it. So today it is out of ban, but overall the stock is making a base. So I like the stock at current level. So this is the only one which I like in the whole Adani pack.
All right, let's find out some top fundamental stock recommendations then. And Sandeep Sabharwal here lists out his top fundamental idea.
We hold is Apollo right now, and I would think that the company will continue to do well because of various factors. One, they have cut down on capex significantly, so next 2 years we'll see deleveraging in the balance sheet. Secondly, as per the company conference call, their raw material product basket will fall another 5% in the fourth quarter because typically they hold inventories for 6 months. So the entire rubber prices are in fact down significantly, and crude derivatives have also fallen as supply has increased. So profitability will keep on improving. Demand is subdued, and but in these kind of industries, sometimes you have huge volume growth, but profits decline. So that doesn't create any wealth for shareholders. We need profitability growth. I think profit growth will be strong, and going forward, if the demand also revives, then that could be an added benefit. So we continue to hold Apollo Tyres.
The markets have been stuck in a range. Last 12, 13 months, Nifty has just gone nowhere.
The index has doubled in 3 years, and if you expect more than that, I don't think the stock market is a place for you. The bull market that started when the finance minister announced the long-term rates in income tax for corporate India 25% is still intact. It's still headed higher.
right, let's keep it with individual stocks then. And what's the outlook, Devin, when it comes to Cipla, given the fact that we did see that delay of Giadvir, then there was the inspection by the US FDA on the Indore facility. Has it now been priced in, given that the stock was a big loser in trade yesterday?
So I'm not too sure, Avan. I think how much negative sentiment it can continue with, because I think what one has learned is that in pharmaceutical business, moment you are exporting to America, US FDA, I think gets more active. And that is where probably I think most of the companies have suffered at one point of time or another. I think this is a situation which every pharma company has to live with. And probably I think one will have to look at the business. In case of Cipla and Sun Pharma in particular, I find that the portfolio of products that they are relatively, I think, more stable. Probably despite of all these inspections, and I think hopefully they come around with, I think, the clarity on these inspections. I would rather like to believe that I think product portfolio remains absolutely strong proposition, and there exactly the margins are also, I think, relatively stronger compared to many other generic players, because they are basically into the complex generic specialty generic products. So from that perspective, I like both these companies from investment, and would like to believe that yes, I think they would have probably the ability to answer those US FDA inspection queries, and probably I think they will turn around. So yes, currently the stock price has corrected. Maybe I think the fall continues due to negative sentiments. Maybe one can add the stock into the portfolio in subsequent fall.
Even outside what happened to Cipla yesterday and where markets are headed, which is one stock which you've been holding on for from last 10 years, and you have, as of today, every reason to believe that you would like to hold it for another 10 years?
So if it is for pharma, Nikunj, I think
across the board. One stock Devin Choksi bought in 2010, and he has every reason to believe that he will not sell it before 2035.
Yeah, I think that includes the list of course, Cipla we have been holding from 90s. But the more important part of 2010 onwards, or maybe little earlier to 2010, I think companies like Bajaj Finserv and Bajaj Finance, we continue to like this particular business and the way in which they are growing this business. The subvention pricing mechanism has probably yielded maximum amount of return to the company from the capital employed, and at the same time to investors as well. And given the kind of technology strength that they are adding into the front end for adding different products and distribution of those products in the financial basket, I would like to believe that Bajaj Finance particularly would remain a very strong proposition in the portfolio. And any corrective fall, the one which we saw recently, I think are the opportunities that one thinks that I think one could add into. Similarly, the situation is Finserv, where the insurance portfolio is gaining much more strength, and they are basically writing profitable insurance business. That is what is more important, and that separates them from many other insurance companies. So they are relatively slow because they write profitable business. I would think that I think this is a good strategy eventually for the longer term, because insurance is a business which you write for long many years. So that is where I believe both these companies could remain in my portfolio, given the kind of strategy that they've implemented.
45 times in the last 10 years, and that's the market or magic of compounding. 45 times for Bajaj Finance in the last 10 years. One insurance stock which did rather well for itself and was an outlier yesterday, Anuresh, was Star Health. It's a stock where Rakesh Juniwala and Rare Enterprise have an investment. It's nowhere close to its issue price. It in fact did rather poorly ever since it has been in the public avatar. What do you make of yesterday's price action, Anuresh, in Star?
So yesterday was a good price action in terms of volumes also. The volumes were the highest in the last 6 months. The last time it saw volumes was back in July when it started recovering. Say in July it made a bottom around closer to 470 levels. This time the bottom in say December was around 480. The January, February bottoms were around 489. So it seems like there is a base at 470 to 500 for the stock, and that is the place it bounces back from. So yesterday's price volume action was positive. A large volume uptake from the bottoms is generally a good indication. So in this case, the trade would be, there should be a little bit of a fade off of this candle, and that should be a buying opportunity wherein you keep a stop loss at the low of the last candle, which is basically 512, and try to buy it closer to 530 to 550 in the decline if it comes over the next couple of sessions.
Some defense stocks as well in the spotlight. BEML, for instance, has joined hands with DMRC-led special purpose vehicle. This is to construct the Bahrain metro. And you've also got Bharat Dynamics, who's received an export order to the tune of $255 million. In fact, let's hear our Nishchal Maheshwari's view on the defense space and some of his top ideas.
I'm very positive on the whole outlook as far as the manufacturing and infrastructure space is concerned. Our topics, and even in case defense also. And now I think Prime Minister has announced that defense export is what he's going to focus on as a government. And they are targeting, I think, 5 billion worth of exports by some date, 2025 or 2030. I think some number is there. So I think these are all very, very positive indicators. So government is totally supportive of the sector. What are our topics in this? So I think defense, we continue to remain positive on HAL. And in the private space, we like solar industries. These are our two topics as far as defense is concerned.
Okay, let's get a view then from you, Deven, as to what the outlook is on defense. We heard Ramesh Damani talking about how he's bullish, just a short while ago Nishchal as well, taking out his top bets. Given that some of these stocks have been in the news and have been perking up in an otherwise dull market, which are your favorites?
So given the fact that I think there is a market which is opening up for about 8 lakh crores worth of revenue in the defense space, some of the established players would probably have the lion's share out of this market. And that is where probably I continue to like solar industries, their subsidiary economic explosives. I think is basically the one which is catering to defense. What I have understood in the defense business over the last many years, that I think this business has a long gestation period before it gets acceptance or the product gets acceptance. And once it got accepted, I think then you have a sustained revenue with a profitable business. Solar industry in particular, I think have been we like because of the wide range of product portfolio that they have created for a period of time. And at the same time, strategically investing into newer technologies like drones for the purpose of, launching missiles and the rockets. I would think that this is one company where one could possibly keep an eye on. Of course, I think valuation-wise, it is not cheap. But it has always been like this, given the kind of low floating stock that it has in the market. Valuation has always remained a little bit more on higher side. But this company remains relatively more stronger bet into the defense portfolio as far as we are concerned.
We've got a big exclusive, none other than Mr. Narayan Murthy. It's going to be his first big exclusive television interview in a while, at least the first one for 2023. And it's the timing which really matters here, because there is so much happening in the world of technology, there is so much happening in the world of AI that everybody really wants to understand his view on what is the future of AI. Will it be ChatGPT? Will it be Google? Tech layoff, why they are happening? Is the Indian IT sector going through a phase of contracted slowdown? And if worst of the attrition is behind us, then when will really growth make a comeback? There is a winter in the startup season, in the startup world. How will that impact the innovation going forward? So that is one big voice you certainly don't want to miss. At 10 o'clock, stay tuned to ET Now. It's going to be live and mega exclusive. Mr. Narayan Murthy on his thoughts on India, tech, disruption, and the startup world. Devin Choksi, what would you like to hear from Mr. Murthy today? What is that one thing where you think everybody wants to understand his direction, his guidance, and his view?
Yeah, it's a very important question, Nikunj, and I look forward to this interview that you have taken of Mr. Murthy. Definitely, I think few things which comes in the mind as far as I think the business model of Indian IT companies is concerned. Something which they started with in 80s and 90s. And now today, they are basically, I think, more ready to deliver the newer technology related solutions, be it in the space of AI, ML, DL, or in the space of blockchain, cloud computing. Each of these technology blocks, I think these companies are now basically adopting and they're producing solution. One would like to hear how the business transition is happening. Like we do understand that companies like Infosys and TCS have already geared themselves up for that. But how the transition is happening and how exactly I think the players would take position into it is something which I am always very keen to understand and know about it. Secondly, how the business model is changing for the user companies. Up till now, IT was being seen as a capex item in most of the balance sheets. Now the IT is being seen as a revenue expenditure for most of the balance sheet because the companies are offering the IT-based solutions which are being consumed for providing the services to end customer. So whether companies like Infosys is basically making a move to get into the providing a solution-based approach or SaaS-based approach, as we call it as far as their business is concerned. It's something which I would like to understand, which means that I think the product-based solution, if the company is adopting, then one would probably like to look at it because that gives you confidence about the sustainability of the revenue going forward in this changing world. So few things definitely I would like to catch up with your interview at 10 o'clock today.
Couple of other stocks which are going to be in focus, of course, Kotak Mahindra Bank, not just Uday Kotak's commentary, but the fact that sources seem to be indicating that the company is now tapping on to global firms like Egon Zehnder for the CEO search, someone who is going to take on the reins from Uday Kotak. That said, Interglobe Aviation is well in focus and air travel has set a new record in the month of February. The average daily passengers now stand at 4.20 lakhs. So not Interglobe, that's not really been seeing a rub off, but yes, it's the hospitality names which are definitely holding out very well. Be it in Indian hotels, be it Lemon Tree, the entire gamut has been extremely abuzz. They've been given at the strong data inflow, and I think the air travel numbers are clearly a very good indicator. What's the best way to play this story? Would it be by the one aviation name that you have within the listed space, which is Interglobe Aviation, or would it be via the hotel space?
The business prospect wise, I think I have never doubted the aviation space. I always felt that India is one market where the demand scenario will keep the most of the aviation companies extremely busy with either the new seat capacity that they have to build in, or from the point of view of providing the services. So that scenario is never doubted. However, I think what one is not very comfortable as an investor or analyst, the kind of the situation with the ATF, the pricing structure, as a result of which I think most of the times when the crude oil prices goes up, this particular ATF becomes the villain in the pack. And I think it affects the entire investment program of investors. That is what something which I have never been liking into the aviation business. Having said that, I think one would probably like to stay focused more on the ecosystems where these companies are operating. Maybe I think you have indicated the hospitality sector. That is one area where things are looking relatively more stable as far as the growth outlook is concerned. India is very fast adapting to the tourism economy and tourism being treated as an infrastructure. So from that perspective, I think the hospitality sector could possibly remain, I think, better pick as far as our approach is concerned in our portfolios.
Well, class of 21, that's a new season which is coming up on ET now very soon. And this is about companies which have gone public in last financial year. And our first, when the season is making its debut, our first guest is PB Fintech. PB Fintech, popularly known as Policy Bazaar, the stock was the halo stock when it went public, but then came the selling by anchor investors, and the stock, in a sense, that just before budget cracked below 400. But are things looking up? And what about the path to profitability? All that and much more in our first series, in our first episode of Class of 21.
See, we're a marketplace. Yes. So, and this is where people misunderstand. A lot of people think direct players are competition to us. They're not competition. Almost more than half of our sales come from direct players. Because as a direct player, where do I get volume from? I can get it from Google, I can get it from brand, or I can get it from marketplaces like Policy Bazaar and Paisa Bazaar. Now, for the consumer, what's the benefit? He wants a loan. He doesn't care who gives it to him. He wants to know, I want 5 lakh rupee loans for the next 3 years. Who will offer it to me fastest? At what interest rate? And for that, he comes to Policy Bazaar, Paisa Bazaar. Paisa Bazaar gives him a choice out of 100 odd partners. That, you know, because every customer is a different segment. There's some people who are very well off. They will have pre-approved offers from the top banks. There are some people who cannot get a loan at all. And they would have, you know, you're building a sustainable...
Some riders are there, yeah.
No, you will almost have different kind of offers or very specialized lenders who would be lending to them. So building that entire marketplace and making it work in a commercially sensible way for the suppliers and for itself adds value to both the consumer and the suppliers. And so it has a place out there. Of course, many players will come. And
what is the MDP? What is the MDP? The spreads which you enjoy between...
roughly about 2.5%.
Do you think it could sustain? Because credit card companies which are taking risk of their own capital, they get a 2.5% spread. Here you're not taking any risk.
I'm talking about personal loans.
Okay.
Personal loans is about 2.5%. On credit card, we get an acquisition fee.
Okay, that's about it.
That's it.
Meantime, Naresh, let's get in your view then as to what the outlook is on some of those stocks that have been, you know, in the spotlight on the back of news. What's the view on some of those defense names? Have you checked in on any of the charts?
So out of the defense names, I continue to like Bharat Electronics, just underperformed and is making a good enough consolidation and a base. So at say the last breakout for the stock was 85.90, recently started recovering from those levels. Once it crosses 105, it would get into momentum, but at 90.95 is a good zone to accumulate Bharat Electronics. The next one is Bharat Dynamics, which has been sideways after that initial bump up from 450 to 900, where it topped out in April of last year. Then it has been consolidating between 800 to 1,000 rupees for the last 6 months. So this is a stock where 800, 850 is a strong base. Once it crosses 950, 970 would be a sharp takeout. So these are the two names which I like in the defense pack as such as of now. The rest of the names are still in a consolidation mode, could take some more time before the next leg comes in. But BEL and BDL look the most interesting names.
Deven, do you think that yesterday's acquisition by Motherson Sumi has been fairly priced? Any views?
When I have not, I think, actually gone into details about the valuation. So maybe I think at some other point of time, I may be able to tell you more about it.
Two other names which continue to remain in focus, and that's Minda Corp and Precall after that sizable block deal that you saw, and all the speculation around whether or not this is going to be a hostile takeover. Once again, there's been a clarification, and Minda has reiterated that it will remain a minority shareholder in Precall, and they are not looking at a hostile takeover by any chance. So that's going to be another segment which is going to be in focus right now. In fact, Minda Corp has acquired that 15% stake, like I told you, in a block deal about a week or so back for 400 crore rupees in an open market cash transaction. Let's hear out what Minda Corp had to clarify in their conference call.
As you all are aware that Minda Corporation has purchased 15.7% equity in Precall for a cumulative amount of 400 crores through on-market transactions on 17 February 2023. The shares of Precall are purchased solely for the investment of the surplus funds available with the company. There is a board mandate to deploy cash, and this is the best use of the funds after evaluating various opportunities over a period of time. We have analyzed the performance of Precall over a period of time and observed that it has a significant potential for growth. Minda Corporation investment in Precall is through market purchases, constituting a minority stake, and this investment does not grant any special rights. Minda Corporation will continue to focus on its consistent, sustainable, and market-leading performance.
Okay, yesterday the one space which was buoyant, which is of course, besides cement, is some of the mid-cap IT names. So Coforge held out by 3.25%. You had Persistent as well hold out by 3.25%. Both these names were good and buoyant in trade. Devin, I don't know if you're relooking at IT. Most of these names have lifted off quite a fair bit from their 52-week lows already.
Yeah, I think yes, we have been liking some of the niche companies within the mid-tier IT segment, and companies which are basically providing the engineering solutions, companies which are providing the solutions in the autonomous vehicle segment, companies which are providing the niche solutions in the cloud computing space, the likes of LTTS or LTIMindtree, or for that matter, Sand Technologies, Tata Elxsi. These are some of the companies, even KPIT, some of the companies which we believe are having a right, their position is right as far as I think the business segment is concerned. And that's where probably it makes more sense to buy them into the portfolio. The market is giving an opportunity currently at this point of time. We believe that I think around 20-25% kind of average growth is being seen in their revenue and the profits over next 3 years, at least I think from whatever the business that they are executing or the order book that they are executing. From that perspective, we like to buy these companies into the portfolio, particularly when the market offers them under corrections.
Okay, let's look at the PSU banking space. And Naresh, this was the go-to space, but most of the PSU banking stocks, either they are in a consolidation phase or they are lacking any momentum. Do you think the big momentum move what we saw in PSU banks, let's say in 2021 and better part of 2022, that's history now?
So I would doubt that. Maybe in the smaller PSU banks, yes. In the larger PSU banks, we are just getting out of a longer term trend, or starting a longer term trend where it could sustain. Say after the huge move, so say Bank of Baroda from July at say 90, 100 went up to 200 levels, and now consolidating for a few months would be normal. Say the recent lows is where I would keep my say stop loss, which is where the view changes. So if we break the recent lows and sustain below that, that is where we can say, okay, the top is in place and maybe the whole trend has got changed. As of now, it looks difficult. So say, for example, in a Bank of Baroda, that would be a price of 145, 150. In a State Bank of India, it would be 480. So till the time we don't break those lows of February, the momentum remains positive and it's still a consolidation. But I would not venture out in the smaller PSU banks because some of them could have topped out.
Okay, let's get in those mid-cap recommendations going as well and find out what exactly it is that our chart is picking out. And Kunal, run us through your top bet.
So I would suggest a buy on GNFC now. GNFC, GSFC, both these stocks, they started to get into a breakout mode yesterday. GNFC was just about on the verge of closing above its 50-day moving average, about the 556 mark. So would suggest this as a buy. Targets of 588, stop loss to be kept at 540.
Okay, Naresh, let's get in your top mid-cap call.
So that would be a buy on Indraprastha Gas Limited, IGL. The stock is trying to knock at that 440, 445 mark for the last almost 4-5 sessions. That's a major breakout point for the stock. And oil and gas as a sector is looking very interesting. The whole sector has gone through a consolidation phase, and the returns have been terrible for the last 2.5 years. And now say they're still available at July 2020 prices. So there could be a big catch up, and that is where IGL, MGL, a lot of these names are coming closer to a breakout. So IGL is something which is just 2% or 1% away from the breakout, expecting it to break out going forward, preempting it, so the risk reward is good. Stop loss at 424 and a target price of 480.
Right. Okay, Devin, before we let you go, anything that's looking attractive in this listless market, anything on your radar or anything that you've bought recently?
I shall continue to like and would like to give preference more to the automobile companies. Whether I think you buy into the OEMs or you buy into the auto ancillaries, I think the opportunity is going to be opening up big time, particularly with the scrappage for commercial vehicle, which is becoming now a reality. From April onwards, the government vehicles are going to be the first on the block, which will be coming up for scrappage. We believe that we are likely to see an additional demand in heavy and medium commercial vehicle of around 2 to 2.5 lakh vehicles eventually. So that is one area where I believe that I think the companies like Ashok Leyland, Tata Motors, they're relatively much more stronger and I think much better position at this point of time. Having corrected the cost elements, I think as far as Tata Motor is concerned, I believe that I think this company offers an opportunity from investment point of view. So likewise, I think many other automobile ancillary companies we particularly prefer, given the kind of a growth that they are experiencing currently with the market opening up for them. The auto space remains, I think, relatively more favorable for us at this point of time.
Okay, Tata Motors it is for Devin. Devin, always good to have you on the show. We'll let you go on that note. Let's also tell you what else is happening outside the world of markets. And another earthquake struck the border region of Turkey and Syria just 2 weeks after the area was devastated by a larger quake or series of quakes, in fact, that killed more than 47,000 people. The latest earthquake killed 3 people and injured 200 people thus far. In fact, there were 32 aftershocks following Monday's tremor, and the largest of them had the magnitude of about 6.8. Also, US President Joe Biden made a surprise visit to Ukraine with days to go before the first anniversary of Russia's full-scale invasion. Excuse me. The US President also pledged an additional $500 million in military assistance to Ukraine during the visit. In fact, the US has already delivered more than $100 billion in assistance to Ukraine.
Right on, North Korea has fired 2 ballistic missiles towards the East Sea, which is the second such incident within the last 48 hours. And it's been fired just a day after the US and South Korea have staged their joint air drills. However, the North Korean leader's sister has warned of corresponding counteraction to the US-South Korean joint military drills. Meantime, Goldman Sachs strategists see an economic shift from reopening to recovery, and that's driving Chinese stocks as much as 24% higher by the end of this year. The firm sees a potential 24% upside to the MSCI Chinese index, and the country is moving past the reopening that followed the stringent zero-COVID policy. Meantime, Wipro has slashed the annual salary offers of freshers by 50%, after promising them a high pay. Wipro will now be only able to pay the annual package of 3.5 lakh to freshers, whereas the company had additionally promised to pay an annual package of 6.5 lakh rupees to the fresh candidates. And Uddhav Thackeray's fight for survival and the Sena legacy continues as the Supreme Court will be hearing the former Maharashtra Chief Minister's plea on the Sena symbol dispute today. Remember, the EC recently ruled in favor of Chief Minister Eknath Shinde on giving his faction the ownership of the Sena name and the party symbol. In the plea, Uddhav Thackeray has blamed the EC for failing to discharge its duty and erroneously handing over the party name and symbol to Shinde's camp. And in the world of sport, India has entered the Women's T20 World Cup semi-finals, beating against Ireland by 5 runs. Meanwhile, the captain, Harmanpreet, has now pushed for her crucial role in the victory and has been hailed positively for that.
Okay, let's move on. And Kotak has been holding an FI. FI conference where full-fledged attendance of FIIs is being seen in person. Banking NIMs, new age companies, slowdown in the consumer segment are some of the key talking points that are discussed at the conference. In fact, Pankaj joins in with details of day one.
Well, last week it was the IIFL conference and this week it's the Kotak Security Conference. Yesterday was the first day and, we clearly get a sense that a lot of FIIs after 2.5 to 3 years have come down to India and they are taking a lot of physical meetings through the day. There are a lot of FIIs who are attending these meetings physically versus, what was happening via the video mode in the last couple of years because of, really how things were moving in front of COVID. But this time it's a full-fledged sort of a conference. It's happening, whether it's a large FII, mid-cap FII, small-cap FII, you really get a sense that meetings all across the board are happening in. Now, there are 3 or 4 questions that, particularly I could pick up, or 3 or 4 themes that were essentially discussed. Will banking NIMs contract after Q4 or are we towards the peak of the banking NIMs? And that's why banking stocks recently have corrected. That's probably the first question. The second is a lot of PE players are selling these new age companies, but is the worst pricing? Should one look into it? That's probably the second discussion theme. And third is the consumer slowdown that we've already spoken about. So is that consumer slowdown a prolonged one, or probably after November when you got that excessive Diwali sales coming in, is just a blip which is taking in, and it will settle down in some time. So these are probably three things to watch out for. What's happening to NIMs of banks? Will the new age companies bottom out? And is the consumer slowdown that's visible now is on a prolonged side or no?
Thanks very much for giving us those details. Let's move right on then to the index calls for the day. We've used every sort of synonym to the word range bound to describe today's day trading outlook, and therefore it comes as absolutely no surprise to see a unanimous hold call coming in for the Nifty, given that, by the way, during the pre-open we're skirting around the 17,900 mark, and that's exactly what the Moodometer indicates. What about the Nifty Bank? Well, there you have it. It's absolutely the same call on the Nifty Bank index, given that we're working with a fairly quiet day of trade.
You got a 50-point uptick on the Nifty. You got a flat start on the index. 60-point uptick on the Nifty. I mean, are we going to get tossed around? Let's see. Kunal, we've discussed Tata Motors, I think perhaps on a daily basis, but now the stock is showing serious amounts of traction. Is it time for leadership in the auto sector to change from Mahindra & Mahindra to Tata Motors?
I would say I would not sense a change in the leadership, but more of addition towards the leaders. So, when you look at the entire auto pack, I think except for M&M, there is hardly any large cap names which have looked very strong. I think from the two-wheelers, there's Bajaj Auto, which is starting to emerge as a potential breakout candidate. With the likes of Hero MotoCorp, Eicher Motors, Maruti to a larger extent, all of these stocks have disappointed largely. But I think in that regard, Tata Motors has done exceptionally well from that sub 400 mark, which the stock was trading 2-3 months back. I think it's recovered quite well. There are very strong confirmations of breakouts which have happened for Tata Motors in this last 2-3 months of up move, and I would probably believe that this move should take the stock ideally back about that 480 to 500 mark, possibly in the next 1 to 3 months. So yes, would be bullish on Tata Motors even from current levels.
So that one stock that you pick out is not M&M but Tata Motors, you're saying, for a fresh buy?
Yeah, for a fresh buy at current levels, Tata Motors.
Okay. We've got just about a couple of minutes to go, and Naresh, you were also talking about a hold call coming in on the Nifty Bank Index. You believe that we're likely to remain range bound?
So actually on the Bank Nifty, I would slowly be shifting towards a buy on the lower end, say, because it has corrected quite a bit in the last few days compared to the Nifty. And say the last bottom is not very far away. So the recent bottom was in the band of say 40,000 to 40,500. We are almost going there. So closer to 40,500 or lower is a place where I would actually be shifting towards a buy on the Bank Nifty. So this correction, if it continues for a couple of days, it would get into the buy zone. I would expect it to again bounce back and overall maintain this range of 40,000 to 42,000. So at 40,500, it becomes a risk reward buy. And say if you look at the Bank Nifty weightages, we've not seen HDFC Bank do well, which is almost 1/4 of the Nifty, then another on a 1/4 of the Bank Nifty, then ICICI Bank, which has seen a good enough correction. So I don't see a correction in a larger sense unless these two heavyweight names make a trend change. But essentially, they're both setting up for a bounce rather than a breakdown.
Okay, getting set then for the market open this morning. Couple of stocks which are in focus while the Nifty seems absolutely quiet right now in the pre-open rates. We're just about marginally higher. It's one of those listless phases for the market, Nikunj.
Yep, 36 seconds to go. Not that anybody is really looking forward to the market open or anything specific in terms of rates. So you just have to let the screen do all the talking. You need something additional for the market to generate upside momentum. Clearly, the current set of cues are not working and they are not generating upside momentum. The good bit here is that despite so much of volatile news flow, the fact that you've come on the right side of the market, earnings have not been great, Adani fiasco, that just tells you that market in a sense are not really very nervous about the medium to the long term story. Short term, it's about technicals.
And that's where I think a lot of give and take clearly seems to be happening. First rates, any second will just come up on your screen now. And the first rates on your screen, there you go. 39 points higher for the Nifty and 900 and about, I'll just let the screen do the talking here because there's no clear trends which clearly are there. 127 points higher for the Sensex, 2 points here or there on the Bank Nifty. The breadth of the market is looking meaningfully better than what it has looked in a long time. Let's look at some individual stocks. Now you want to start with autos because that's one pocket where you have mild outperformance. Mahindra & Mahindra, Tata Motors and to some extent Bajaj Auto. Leyland also has done rather well for itself. Siemens, ABB, that Cummins, that space has done rather well for itself. There was a dead cat bounce in some of the insurance stocks yesterday. So it included Star, ICICI Prudential, HDFC Life. Can those stocks come out of the COVID sell-off what they saw? But nothing in the system which is looking extremely exciting. I mean, Zomato was a big mover in the second half of trade yesterday. Let's look at Zomato and Policy Bazaar, but that's about it. Yeah, this is the only one which is showing signs of life and inertia. But barring that, nothing, honestly, nothing.
Mahindra Bank, that's the one in focus. Reports are indicating that the company is likely to have tapped on Egon Zehnder for their CEO search. Interglobe Aviation as well. Air travel has managed to set a new record high in the month of February. The average daily passengers has now hit 4.20 lakhs. ACC Ambuja too, because there's positive news flow, and I think this came in yesterday post-market hours, wherein they've resumed operation at their Himachal plants. The freight rates have been lowered by 10 to 12%. Both Ambuja and ACC have gotten off to a good start there. BEL as well, they've launched indigenously developed signalling system with Delhi Metro. The first rates on BEL haven't trickled in. And then, of course, there's Tata Power, Adani Power, IEX. They're all in focus. The government, remember, has mandated ICB power plants to operate at full capacity. So that's positive news flow for both Tata Power as well as the Adani Power and IEX, wherein the Power Minister has mandated ICB power plants to sell surplus power to power exchanges. So IEX as well, this augurs well for that. Minda Corp and pre-call, the clarification coming in, wherein Minda has reiterated in that conference call that held yesterday that it will remain a minority shareholder in pre-call and that they are not looking at a hostile takeover by any chance. So that's one stock which is also in focus. There's BEML as well. They've signed an MOU with DMRC-led SPV for a Bahrain metro rail project in the phase 1. So that's another stock which is in focus. And then, of course, there's Bharti as well, which has now rolled out higher minimum recharge plan in 2 more circles. That's another stock which is in focus. But again, it's just really tempered all across. You're not seeing any big moves anywhere. I just want to revisit some of the big movers from yesterday though. Shree Cement, Coforge, Persistent Systems, and then Samvardhana Motherson, which held out by 3% yesterday. Let's see where that is currently standing. Midcap IT actually continues to see a very smart follow through. Both Coforge and Persistent are winners today as well. But Naresh, at an index level, there's nothing happening. Absolutely flat start.
Absolutely a flat start, so nothing much to make out of the index. But the fact is, at least you're not taking a sharp tick. And the small cap index also remains flat. So IT is a pack which has been doing well, and that is where I like Wipro, because that is a stock which has the best risk reward as of now for a bounce back trade. So Wipro at 407 is what I'm buying in today.
Okay, and Kunal's first trade, that is a buy recommendation on Tata Motors.